Hi everyone, welcome to the end of day markup for Tuesday the 12th of November. So supply has very much been in control. I want to follow on from the end of week review. Obviously there was no video yesterday because it was a USD bank holiday. However, I can see that there was quite a lot of movement for a bank holiday yesterday. Really clean price action. I haven't actually placed a trade since last week, since before the election. So let me see, where was yesterday's daily open? It was Friday, 11 p.m. or Sunday, 11 p.m. That's Friday. Sunday is this candle here. So we can see over here from yesterday that the daily open was up here at 2684. There was a tiny bit of pullback. So if you look and see where price actually pulled back into before it started dropping, it pulled back into where the old all-time high was. That's why I think it's really important to keep these levels on your chart. So this was the all-time high over here, this wick high. That was the all-time high for 21 days, right? So strong point of interest. So it's very interesting to see how price reacts to these levels when it comes back to them. So daily open was over here, price pushed up, wicked off the old all-time high, fell to the downside, came back up, tapped into the supply zone then above the daily open. So it took out sellers above the daily open and then dropped, right? So our 2 points of interest for our price strap from the end of week review was 2,700, which is our whole level, and then 2688, right, where this previous low was. So I'd mentioned that if price came above this level and stayed above it, that would tell me that, let me just zoom out a bit. That would tell me that yes, supply was previously in control for this big drop here. It looked like demand regained control here, and it did, but it might have just been a pullback, right? We had this drop down here. Now, I mentioned that price was ranging in between this high and this low, right? It was consolidating from Friday, from price just slowing down. And that's why we had our point of interest to the upside, which was at the wick high here, right? The previous swing high on this leg of price action. And then we had a lot of lows here, these wick lows. If you can see them all here, resting above 268, and that's why we use 268 as our downside point of interest. Because if price broke below there and stayed below it, that tells us that selling pressure is stronger than buying pressure, right? Whereas if price came down there to take out all those buyers and then shot up, that tells us that this drop to the downside was just a pullback, right, for a further push to the upside. So that's why we have these 2 points of interest at each side of this consolidation. Now, as soon as price breaks below these lows, you see the way this big bearish candle and it stayed below them, that's your signal that, right, supply is in control. Where's the extreme low from this leg? It's down here, right? So that means you have the room to look for sell opportunities anywhere in here, right down to this previous low. So staying on the 15-minute time frame here, our 2,700 alert didn't get triggered. Price didn't come up that far. However, it did shoot to the downside. It broke those lows. We've seen, right, okay, it's taken out those lows. It stayed below 268. Now we can start looking for sell opportunities because we know that supply is in control, right? So, like I said, whoops, accidentally muted myself. We can see that price pushed through 2675 quarter level, right? Pulled back. Do you see this last up candle before the fast move down? That creates our supply zone. Okay, really nice supply zone resting just above 2675. And remember that whenever selling pressure is stronger than buying pressure, meaning when price is making a series of lower highs and lower lows and it's downtrending, the highest probability entries or setups are from supply zones resting above our whole levels or quarter levels, right? So price came below that supply zone. It broke the candles there that created the supply zone. It built liquidity at 2675 because do you see all these wick highs here? So that was it enticing sellers into the market. It pushed up. It took out that internal range liquidity. It took out this little high here just by a tiny bit. Tapped into our showing, right? So that was our sell opportunity there. I know yesterday was a bank holiday, but for any of you that were trading, this was a very valid setup. So selling anywhere in there, really, right? It doesn't matter where your sell opportunity or where you enter your sell on, right? As long as your stop loss is above that candle that created the supply zone. So obviously that better of an entry you're going to get that means that you're going to get a better risk to reward, meaning that you can use a higher lot size if you're risking the same amount consistently, okay, which you should be. But it doesn't matter, right? So just say you seen price take out 2675 and it's dropped away there. You shouldn't say to yourself, oh, I've missed the entry, right? You can still catch the entry. It just means you're going to have to use a lower lot size because your stop loss is bigger, right? And I'm going to talk through any continuation entries in here in a minute. But for the TP for that one, since you're selling off 2675 quarter level and selling pressure looks like it's stronger than buying pressure, and this is our previous extreme demand zone down here, I would try for this one, I would personally have targeted 2650, right? Because it's pretty safe. We have some wick lows here, just resting above 2650. So even though it continued dropping there, and obviously the elections and whatnot, the strength of the US dollar is what's currently pushing price to the downside on gold. As we know, anything can happen. So it could have very easily came down here, taken out the liquidity there at 2650, tapped into this demand zone here, and then pushed away, right? So for me personally, I probably would have targeted 2650 with that one, and that would have been stop loss above that high. That would have been around a 1 to 5 risk to reward, okay? Now price did continue falling from there, and let me just find the daily open for today. So it looks like New York open happened, push price down a bit further, entice sellers in at 2610 here with this, the wick almost hit into it, but it didn't quite. And then we have the daily open for today was down here at 2619. And again, do you see where price pushed up to? So there was some wick highs here, equal wick highs here and here, right? Resting above 2625 and below the New York open, right? So prices pushed up, taking out the sellers from those equal highs there, taking out any sellers at 2625, fell to the downside, broke these lows, pulled back, right? You see this last up candle before the fast move down that broke this low to the left? That's where you're drawing your level of supply from. Drag it across, and you can see that's exactly where prices came back and tapped into before a further push to the downside, right? So still on the 50-minute time frame here, that was a nice sell opportunity, selling on that tap into that supply zone, stop loss just above that candle there that created the supply zone. If you target at 2,600 whole level, that would have been a 1 to 6 risk to reward. It hasn't quite came down and taken this out just yet. It might do, but for this one, it would have been a 1 to 6 risk to reward, or else you could have targeted the London Open here. And if you look and see how price reacted to London Open, it shot right to London Open, and then that's when we seen the pullback, right? This is why we see pullbacks, because it's tapping into an area of liquidity. It's taken out a lot of liquidity from London Open, and that's why we're seeing that pullback before a further drop to the downside, right? So that was our 50-minute sell opportunity continuation from today. But let me just drop down to the 5-minute and see what we can see over here. There, I can actually see another 50-minute entry. So this pullback into 2610. Created a supply zone here, right? Last up candle for the fast move down, using that inside bar, this bar here, this candle here. Price dropped down, broke these lows to the left, confirming that supply is still in control, pulled back, tapped into it. Oh, I actually have some equal lows there marked up in the chart here. That's probably from a long time ago, but we had some equal lows there, see here and here, resting just above 2,600, where there was also an imbalance resting. So I can see now that imbalance is now being filled in, so we can delete that. The equal lows have now been taken out, so we can delete that. And yeah, it looks like supply is very much still in control here. Okay, let me just drop down to the 5-minute and we'll see what else there actually was in here, because those are the, oh, sorry, I was talking through this setup. Got carried away there. So 50-minute entry, price pulled back, created that zone, dropped to the downside, broke these lows to the left, confirming supply is in control. Price came back, tapped into that supply zone, stop loss above the candle that created that zone, so this inside bar. TP at the previous low would have been a 1 to 3 risk to reward, all from the 50-minute time frame, right? So these are all 50-minute time frame entries, showing you and proving once again that you don't need to be on the 1 minute, the 3 minute, or the 5 minute. if you feel like you're always taking unnecessary losses, right? If you feel like you're over trading, if you feel like there's a lot of uncertainty because you don't know which direction to trade in, you don't know which zones to trade off, you don't know which zones to eliminate, just go into the 50-minute time frame. There's very little entry opportunities, not little, but there's a lot less entry opportunities that fit our entry model criteria on the 50-minute time frame, meaning that you should have more patience in waiting for price to come to you, right? Because you know exactly which zones that you're waiting for price to come back into. There's less room for confusion and decision, right? It's just a lot cleaner. You're probably going to get like 1 or 2 entry opportunities a day on the 50-minute time frame. So if one of your goals is to take less trades, maybe you're finding that you're catching some nice wins, but you're giving it all back to the market because you're just over trading, and you might catch one nice win, but then you take loss, right? And you're getting frustrated because you're finding yourself always at break even, stuff like that. Take a step back. If you just trade from the 50-minute time frame, you're going to be a lot more confident in which way the market's actually moving, right? Which way the market's actually trending. There's less entry opportunities using the entry model, meaning that you're going to be jumping into less trades, right? You're going to have a lot more time to make higher quality decisions, because on the 1-minute time frame, the candles print so fast that sometimes it's easier for our emotions to take over control, and therefore we make low quality decisions, right? We're just jumping in, we're fear trading. But on the 50-minute time frame, like whenever this supply zone over here was created, you had 9 hours. 9 hours until price came back and tapped into that zone, right? So that's a lot of time for you to, maybe you were looking for buys off a demand zone here, right? You have 9 hours to figure out, right, actually supply's in control, highs are holding, lows are failing, I should probably look for a sell. And then you can identify that supply zone and then wait for price to come into it and then catch the sell opportunity, right? Whereas in the 1-minute time frame, sometimes these setups play out in a matter of like 2-3 minutes, okay? So do you see how you have it's less stressful, you have more time to make better quality decisions on the 50-minute time frame. There's less room for trading in the wrong direction, and also there's a lot less supply and demand zones, right? All you have to do is identify if selling pressure is stronger than buying pressure. If it is, then only identify supply zones. Don't even bother looking for demand zones, right? Unless it's extreme ones like this. It's just nice to have them on your chart just in case it wants to respect them again, because this demand zone we had over here, price tapped into it and blew up 67 points to the upside. So it is smart to keep those higher time frame demand zones on your chart, even though supply's in control. Because just say that price did want to come back into that zone and shit away again, but you've told yourself, right, supply's in control, I don't need demand zones, let me delete this. That means that when price comes to that level, you're going to be blind, right? You haven't prepared yourself for the potential of a reversal, right? But it's just nice to have those higher time frame zones. But price is now shot through that zone, so we can remove it. It's no longer valid because prices broke below it and stayed below it. Yeah, I think that's it really for today. Just 2 sell opportunities. So for this one yesterday, I'm not going to include it, but do you see how the daily open was up here, but we waited for price to come below our point of interest, which was 260, and then you can see a really nice clean opportunity here below 260, right? Whereas if you were trying to trade within this consolidation, especially if you're on the 1-minute time frame, you might be jumping from buy to sell. You might have convinced yourself that price is going to shoot to the upside, and then you're getting caught in buy opportunities. Well, what you think is buy opportunities, and then you're getting stopped out. And then by the time price comes over here and gives you this really high quality sell continuation opportunity, you might have hit your daily loss, you might have lost your account, you might be too much in drawdown and too far into tilt that you're incapable of actually identifying this opportunity. So always wait for price to break out of these levels, like these consolidations. Wait for price to come to our points of interest, and then determine what price wants to do from there. Because price will always tell you whether buying pressure is stronger than selling pressure, or if selling pressure is stronger than buying pressure, because it will break below these levels, stay below them, and you'll see highs holding, lows failing, right? Which should indicate that you should apply the sell entry model rather than the buy entry model. So this was for yesterday, so I'm going to remove this for our total available risk to reward. And then these were the two setups for today. So this sell actually pushed down to 2590. So that was a 1 to 4.5 risk to reward. Let me see if there was anything else in here on the 5 minute. So there's a nice supply zone there, that the only thing is that it didn't come down and break this low before it came back and tapped into it. So it's not actually valid. Once price broke these lows, this was the next supply zone here. Did it break that low? Yeah, there's technically an entry model in there with the supply zone. Broke the low, came back down and tapped into it, but it's not clean enough. I don't really like it. There was one up here on the 5 minute time frame. So this last up candle for the fast move down, you can see that price created that supply zone above 2610, broke these lows to the left, came back, tapped into it, also taking out any sellers at 2610 on the tap into that zone, right? So you see the way it wicked off there. So that was a 5 minute opportunity. Putting your stop loss below that high, and target in the next point of interest would have been 2600, making that a 1 to nearly 3 risk to reward, or you could have targeted 2590, would have been a 1 to 6 risk to reward. And yeah, that was it. Yeah, that was it for today. So 2 15-minute time frame entries and then 1 5-minute time frame entry. You can see how price is kind of slowing down after yesterday. There's some really nice sell opportunities in there from today, but it seems to be rebalancing itself after that big move yesterday. But let's calculate the total available risk to reward. 5 to 7. A 1 to 5.72 plus a 1 to 4.5 plus a 1 to 6.62. Okay. Okay, so there was a 1 to 17 risk to reward available for today using the perfect entry model. There was 2 15-minute entry opportunities, 1 5-minute, and they were all through trend sales, right? Because supply is very much in control right now. Okay, cool. So visualizations for tomorrow, similar to the end of week review video. I'm gonna just take a step back here actually, and we're gonna draw our higher highs and higher lows, or sorry, lower highs and lower lows. Okay, let me just clean this up. Yep. Okay, so we'll do it on the 1 hour, just a bit more data. So we can see that price pulled back here. It made this lower high, pushed down, broke this low to the left, pulled back, created a new lower high, didn't break this low until here, then pulled back, made a lower high, pushed to the downside, lower low, lower high, lower low, right? That lower high isn't valid just yet until this low is filled, until price comes down and breaks this low. So right now, price has all of this area to play within for us to still confirm that supply is in control, right? If price breaks above this high here at 2625 and stays above it, then that could be an indication of a change of character on the 1 hour time frame, and it could be telling us that price wants to push back up towards these highs, right? But as of now, supply is in control. We've seen a pullback there into the supply zone. We could see a further pullback up to this level, but either way, just remember that supply is currently in control now. And if you struggle with trading against the trend, if you struggle with always trying to catch reversals, I would recommend just adding a wee note saying who is in control. Do your top-down analysis, figure out if buying pressure or selling pressure is stronger, and then just write supply, right? And have that somewhere on your chart, whether it's like a note like this, like one of the indicators that adds a note to your chart, or whether it's just text on your chart. And whenever you have that, it's going to remind you, right, okay, I need to only look for shells, try to focus on supply zones, right? And then whenever you see a change of character in the higher time frame where like these highs fail and price stays above it, then you can simply change that to demand, right? And that's going to allow you to focus more on buy opportunities off demand zones rather than trying to catch reversals. So visualizations for tomorrow, I'm going to use 2590, which is where our previous lower low is. So if price comes down here and takes out that low there, right, pushes down, wicks up, right, you see nice buying pressure stronger than selling pressure, which is what creates the wick, pushes up, pulls back, you can see a series of lows holding, highs failing, right? I wouldn't maybe try and catch the reversal down here unless there's a series. Like, it depends how big this sweep is. If you see a decent sized sweep followed by lows holding, highs failing, and a pullback into 2590, that could be a buy opportunity up to 2600. Just depends how big that sweep is, but ideally what you're looking for is a series of lows holding, highs failing on the lower time frame, indicating that price is taking buyers out of there and wants to push to the upside, right? If you're going to be catching a buy, I wouldn't try to target any higher than like 2610, 2620, just because that is where our previous lower high is, right? So if supply is going to continue being this strong in control, then expectational order flow tells us that we shouldn't see price come and break this high, right? And if it does, it means that it signals that demand's in control now. So always assume the trend will continue until it proves you otherwise. If you're managing your risk, there should be nothing to fear, right? You shouldn't be scared of taking a loss. If you are scared of taking a loss, couple of reasons for that. Maybe you're over leveraging, you're risking too much, and you haven't accepted the risk that you have on the table. Therefore, you feel a desperation for it to be a win because you know that taking a loss with the amount of risk that you've used is detrimental to your trading account, right? So lower your risk, and also just accept the fact that the market's uncertain. It doesn't matter how many confirmations are ticked off on our checklist. It doesn't matter how good a setup looks. The market doesn't owe us a win, right? All we can do is play the game of probabilities and manage our risk, right? And if it's a loss, as long as you're managing your risk properly and your account can handle the losses that you're taking, then you shouldn't be scared of it, right? So it's very easy to assume, like, for us to tell our brains to tell us that, oh, the market's dropped loads now, so it's exhausted the downside, right? So it must fly to the upside now. No, that's us attaching our personal bias to price action and telling ourselves that it's exhausted whenever the market can never be exhausted. There's so much liquidity that fuels price action, that it can never be exhausted, right? It can always continue in the same direction. And we just have to assume it will until it proves us otherwise. And then we can start trading in the other direction too. So always try to remember that continuation setups give you an 80% chance of being profitable, of being wins. Whereas if you're catching reversals, you have an 80% chance that you're going to get stopped out, and only a 20% chance that it's going to be a TP, right? So I know it's a little bit scary to look for continuation sales whenever the market's already dropped so much, but we just need to assume that it's going to continue in the direction it's already moving until we see a change of character. So 2590 is my point of interest to the downside. If price, maybe this was the pullback and it's done with that now. If it breaks below, stays below, you maybe see a pullback into a supply zone, preferably rested above 2590, something like this. But hopefully we see a break of a low before it comes back in there. But I think you guys know now from watching these videos every day the type of things you want to see when price comes near these whole levels / quarter levels, right? You want price to break below it, stay below it. And very similar to what we've seen up here, right, from our 2680. Let me just push up here. So our point of interest to the downside for this piece of price action was 2680. Price broke through it, right, but it didn't come back and wick reject, right? It didn't give us an entry opportunity down there, but what it did do is it came back to 2575 and then gave us an entry opportunity here, right? So the visualizations that I'm applying to my points of interest, it might not give you one on the exact whole level that we're using, like for this, but at least you know that once it breaks below that point of interest and stays below it, you know that you should be looking for shells. So it might be the next point of interest that you catch a sell entry opportunity off, right? Like 2675 for this example. So down here, it might not give you a sell opportunity off 2590, but if it breaks below and stays below, you know, right, okay, supply's still in control. It might come down to 2580 and give you a sell opportunity. But as long as you're trading in the right direction, as long as you're waiting for liquidity to be taken, then you should be good. And if you're not, as long as you're managing your risk, you'll still be good in the long run, right? So if it breaks below, stays below, and you can see that highs are holding, lows are failing, that could be a potential sell opportunity down to 2575/2580, okay? Point of interest to the upside, I want to use 2620 because let me see. Well, you can see on the 4-hour time frame, there's a supply zone here. This last up candle put the fast move down. So I'm going to delete that one and I'm going to relabel this 4-hour. So that is our higher time frame supply zone here for this recent leg of price action. So I'm going to use 2620, right? Selling pressure has been very, very strong. So we might not see it come right up into the high of that zone. It might come up to 2620 and then we might see a change of character. So if price pulls back to 2620 and takes out these highs, because there's some wick highs here from New York Open today, there's going to be a liquidity resting in there because you can see wick highs here and here, right? So it'd be nice if price comes up and takes out those sellers and then we see a change of character. So if price comes up to 2620 and we see a change of character, right, where highs are holding, lows are failing in the lower time frame, we see a pullback, wick rejection, that could be a sell opportunity down to the previous low, which is this low here at 2590. But if you're going to hold through multiple points of interest, I would highly recommend that once price breaks through 2610 or 2600 and stays below it, make sure that you're moving your stop loss from risk on to risk off, right? Every time price breaks through a point of interest, the first one, take risk off the table. The second one, if you want to continue holding it, I would move my stop loss above this one, right? And then continue moving it manually into profit if you want to hold your trades for longer. But don't put your stop loss too close to current price action. Otherwise, price could stop you out in a pullback and then continue in your direction. So always place your stop loss at an area where if it gets hit, it means your analysis is wrong, right? Because if your analysis is wrong, you don't want to be in the trade anyway, because it means that you're trading hope, not price action. So if you want to hold your trade for multiple points of interest, just make sure that you're managing your risk. Whereas if price pushes up here and takes out these highs here and takes out 2620 and looks like it wants to stay above it, right, where you're seeing taps into demand zones and lower time frames, you're seeing lows holding, highs failing, that could be a buy opportunity up to, honestly, there's a lot of imbalances in here, so it could be a buy opportunity up to anywhere. But same story, if price breaks above this high 2630 and you want to hold it for longer, I would move my stop loss from risk on to risk off. If you want to let it run, right? But it could be a potential buy opportunity back up to 2650. Let me just go into the 4-hour and see. That's a huge imbalance that candle's left on the 4-hour. Yeah. But on the 1-hour, we can refine it a bit. So this is fine. We can see the imbalance can be refined to here. Yeah, basically the same. Okay, so there's a huge imbalance there, but you can see that the majority of that imbalance would be filled in if price came to 2650, which is our next quarter level after 2625. So if we can see buying pressure taking over, we might see a pullback. If you see a nice entry opportunity there of 2620, there it does have potential to go up as far as that, if not further. Even if supply wants to stay in control, it could come up there. Our next supply zone here from the previous high is so we can see price broke that low is up here, right? Around 2,700. But yeah, I do think it's really important to not. I know it's good to look left, right? You want to see what price action done to the left previously at these levels to get an idea of how it wants to react to it this time. But try to not focus too much on this like price action that's nearly like 100 points away. right? All we can do right now is trap price. We know the supply is currently in control. We can see that there's liquidity here and there's liquidity here, right? Let's wait and see which side of this consolidation here price comes to. If it takes out buyers first, it could be a scalp buy opportunity up to one of these levels to look for a continuation. If it comes up here first, that could indicate that it's taking sellers out to prepare for a continuation move to take this previous low out, right? So same as we done on the end of week review video, we're trapping price, we're waiting for it to come to us. Make sure you're setting your alerts right. Don't be staring at price action. Because if you're sat here on the 30-minute time frame looking for an entry, what's going to happen is you're going to think, right, I'm missing out here. The market's moving. I should really try and catch something. So you're going to start dropping down to lower time frames and trying to force trades. You're going to think, oh, I don't know if it's bullish or bearish. Which one should I do? And then you're going to convince yourself that a setup opportunity is there when it's not, right? If you find yourself constantly dropping down the lower time frames to find something, that means that you're forcing trades, right? The high quality setups that you're looking for will jump out at you. It will feel obvious, right? You'll feel comfortable entering them. Obviously, there's going to be some sort of anxiety around executing if that's a struggle that you're still overcoming, right? If you're a new trader and you still don't feel comfortable hitting buy or sell, it might be uncomfortable, but generally, whenever you see a setup that jumps out at you and you have experience and knowing what a good setup looks like, you should feel comfortable and confident enough, and you shouldn't second guess yourself. You shouldn't have to jump down to the lower time frames to look for confirmation bias. You should just feel like, right, this is a good one. I'm happy to put some risk on the table for this, right? So try to stay on the 50-minute time frame, the 30-minute until price comes to your point of interest. Set some alerts. So I'm going to set an alert at, which was it? 2590. So 2590, I'm going to set this alert, and 2620. Right, there we go. So now you just wait, right? You'll get a notification. If you have TradingView app on your phone, you'll get a notification for your phone, like a text message. You'll also get an email, right? So now you don't have to sit and stare at charts, because the longer you watch candles print when there's no setup, the higher chance you're gonna force trades that aren't there. And that means that you're gonna ruin your account potentially, or you're gonna take some unnecessary losses, so that by the time the high quality setup appears, you've basically spent all your tokens, right? You might not be able to trade by then. So it's honestly, it's just way less stressful. Trading's way more enjoyable when you stay on the 50-minute, 30-minute, wait for price to come to your points of interest, and then drop down to the 5, 3, 1 minute, whatever you want, to analyze how price is reacting off that point of interest, right? So yeah, make sure you're setting your alerts. Those are our points of interest for tomorrow. I will keep you guys posted tomorrow. Once I see those alerts getting triggered, I'll drop some analysis into the live analysis channel. But other than that, that is us finished for today. So if you have any questions, just drop them into the Q&A channel.